In this video, I'm going to introduce the concept of R. R is the risk a trader takes when entering the market. It is calculated by taking the number of lots in the trade and multiplying it by the pips of risk. That is, the number of pips between the entry rate and your initial protective stop. For instance, if you enter a trade with 2 lots and have 8 pips of risk from entry to your protective stop, you are risking $160, or 2 lots times 8 pips times $10 per pip. Many traders like to only enter a trade if the risk-reward ratio of the trade is 2 to 1 or 3 to 1. It's sensible to want to risk $1 to make $2 or $3. In the above example, a trader risking $160 may want to capture $320 in profit, or twice the dollars risked. Smarty gives you easy ways to place your profit targets based on risk and the tools to track your progress during the trade. Let me demonstrate. We'll take a trade with 2 lots. We enter our stop, we enter the trade. Smarty automatically calculates the difference between the initial protective stop, the red line, and your entry fill rate, the blue line. In this case, it's 14.5 pips. Since we entered with 2 lots, the total risk is $290. We say for this trade, 1R is 14.5 pips with a $290 risk. Looking at the dashboard, you'll see that our stop is at exactly 1R of risk. And as we look at the dashboard, we'll see that the R values are updated as the trade progresses. Some traders do not like to look at dollars when a trade is on. Viewing a P&L going up and down can be very distracting and cause a trader to make dumb moves. Smarty allows you to see trade moves in dollars as we have been looking at. However, clicking on the Show Dollar box hides all dollar amounts and shows your trade only in R values. Thinking of a trade in terms of R isolates the money distraction from your trading. By thinking of R and not money, the trader can concentrate on price action and the trade and not be preoccupied with the P&L. So looking at the dashboard and watching R, you can see how your trade, the risk reward of your trade is progressing. Let's go flat, and you'll see in this case we realized 0.51 of our P&L, or if we look at the dollars, we'll see we got $148 of profit. Trade plans can also be calculated in terms of R. We will discuss trade plans in much greater detail in a separate video, but for now, a trade plan is a way to place automatic profit targets when a trade is entered. For our discussion today, we will take a trade with a 2R trade plan. Place our stop, enter the trade, and you will notice Smarty has automatically put down a green line. Our R is 21.3 pips. 2 times 21.3 pips is 42.6 pips. Smarty automatically placed the exit target at 2 times the risk of the trade. If you hit your target, you will capture profit equal to twice the trade's risk. Smarty understands the risk of this trade and adjusted the target properly. Currently, we're holding 2 lots. I'm going to add 2 more lots to my position. You notice Smarty added the 2 lots. We're now holding 4 lots and readjusted the R because the blended entry rate has changed. As you add to your position, Smarty will automatically readjust your R value and replace your target at the new R. In this case, it's now at 44.2. Smarty understands that R has changed and readjusts the positions accordingly. In summary, use R to plan your risk reward of the trade. It can also be used to monitor the progress of your trade without concentrating on dollars in the trader's P&L. Also remember, if you add to your position during a trade, the R value is updated to reflect the new trade's dynamic. In the next video, we will discuss how R is used to automatically calculate your position size.